Hey guys, welcome to the Passive Investing Made Simple Masterclass. I'm your host, Whitney Elkins Hutton. And today we have an amazing show for you. We're diving into a topic we haven't really talked about very much and introducing something completely new. So I'm so excited. But before we get introduce our guest here, I just wanted to let you know we record this show live every Tuesday to help you learn the ins and outs of passive investing so you can go into your first or next investment with confidence. So make sure to check out passiveinvestingwithwhitney.com. There, I've got some free educational materials for you, an ebook, an investing checklist, as well as if you want to talk all things passive real estate and see our open deals, you can also hop on a phone call with me. That is passiveinvestingwithwhitney.com. All right, today I'm excited to be joined by two awesome, amazing guests from Madison Trust, Self-Directed IRA company. I've got Donna Udumulla and Nicole Capurso with Madison Trust. Again, they're a Self-Directed IRA company. Donna and Nicole, welcome to the show.
Hi, guys. Thank you so much, Whitney, for having us on. It's a pleasure to be here.
Definitely. Thank you so much for inviting us.
Yeah, and for those that are watching today, you'll see our office right in the background. You might see some friendly faces if you've heard about Madison Trust Company before.
Straight from the Garden State today.
Excellent, excellent. Well, before we dive into some of the cool things, it's funny because I always think when it comes to passive investing, the really cool things is looking at the deals and that's the sexy part. But when you understand things like legal ramification, tax implications, and then just how to leverage different vehicles like self-directed IRA, that really starts cracking open a world for you to where you can leverage all these vehicles to be an even more powerful investor. So I'm super excited for my own learning experience on today's episode. Before we do this, why don't you guys do a quick introduction of just who you are personally and what your role is with Madison Trust. Donna, let's start with you.
Perfect. Thank you so much, Whitney. So I am the investments manager at Madison Trust, and I oversee two departments. One department handles all the incoming alternative investments from our clients. So all those clients trying to get into passive real estate deals, crypto, sometimes it could be boat slips or maybe racehorses.
Very creative, very creative.
All of that goes through my team. And then the other half of my team is the sponsors team. And my sponsors team works with private groups. We're talking about, real estate syndicators, multifamily, anyone raising capital. That group helps them raise capital utilizing their investors' retirement money.
Yes. And my name is Nicole Capurso. I am a part of our sponsors team at Madison Trust Company. So what we do is we help streamline the services for our investment sponsors to make all seamless and easy interactions for their investors who they onboard into Madison Trust.
Excellent. Awesome. Well, again, thank you guys for being here. Let's dive in. I want to make sure we maximize our time today. So let's start with the basics. I mean, I know several of the listeners here, if they're listening in on their favorite podcast player of choice, they probably are familiar with the self-directed IRA. But for those people who have no idea what it is, let's start with kind of the fundamentals here. What is the self-directed IRA and what are kind of the rules of using a self-directed IRA?
Sure.
Our favorite question, right?
I know. So yes, for any listener who just, is not aware of the self-directed IRA process, a self-directed IRA is a tax advantage or tax deferred account that you can have at Madison Trust Company that allows you to invest into alternative assets of your choice, real estate, private equity, promissory notes. And like Donna was saying before, the clients are very creative.
Very creative, definitely. So consider your standard IRA, Whitney. And then in a standard IRA, you do traditional securities, right? Wall Street products, we're talking stocks and bonds. With a self-directed IRA, you go beyond that. Now your ability to diversify just increases because other than stocks and bonds, you're able to get into alternative investments. We like to consider a self-directed IRA an IRA plus due to that diversification and the freedom you get with a self-directed IRA.
And are there any other advantages to using a self-directed IRA over a traditional IRA?
Absolutely. And within a traditional or conventional IRA, you're really limited to what's the, the stocks, bonds, and mutual funds on Wall Street. However, having a self-directed IRA account allows you to go beyond that. We get investors all the time who want to move over funds from a 401k into something that they're passionate about. And it's all about the investors. That's this type of process we have here.
Mm-hmm. Yeah, I mean, I know I was introduced to the self-directed IRA world probably like around 2017. I had a 401k from a previous employer, and I wanted to figure out how to put it in real estate. And somebody told me, like, hey, put in a self-directed IRA. And I'm like, huh, I don't know what that means. And I started researching it, and I'm like, like you guys said, there's all the, can get greater diversification, right? Like, because it's like the IRA plus. But I kind of realized then, I was like, wait a second, I have more control here because I'm playing within the sandbox as the rules are set out, but I'm not limited by what that one custodian will allow me to invest in. So I have more control, I have more flexibility, and I can just supercharge my portfolio growth utilizing these other quote unquote alternative assets like real estate, which for me, I think is really mainstream. We all live in a house with a roof over our head. Like, why not invest in that? Are there, potential for higher returns or tax benefits with somebody using a self-directed IRA over a traditional IRA?
That's a great question. Now, something I always tell our clients is, in this world of investing, everything has a risk. And what's that famous saying, high risk, high reward? Yes. That goes with everything, whether it's the stock market or whether it's the alternative investment world. Whitney, now, the advantage of a self-directed IRA is consider just using your taxable money and getting into a real estate deal. All the proceeds, that appreciation, the profits are now taxed. Versus if you were to do that getting to that same deal using a self-directed IRA, you're under that tax advantage umbrella. So really one of the main benefits of utilizing a self-directed IRA is the fact that your investments tend to grow tax deferred or tax free, depending on the type of account, depending if it's a traditional account or a Roth account. And honestly, for a lot of clients who, again, like you actually are very much knowledgeable on self-directed IRA. Some people just happen to hear the term this year and they're like, wow, I wish I knew this, Donna. I got into so many deals before and got taxed when I was, exiting out. I wish I used a self-directed IRA and I could have kept reinvesting and being under that tax advantage umbrella and just growing my retirement portfolio.
So what are some of the cons to watch out for? We talked about a lot of the advantages of using a self-directed IRA, but what are some of the cons or maybe some of the rules that limit investment?
I love that too.
Absolutely. So, Madison Trust Company is a passive custodian. We cannot advise our investor base as to the different alternative assets that are out there or the deals. We really do encourage each investor to do their own due diligence on the assets they choose to place within their self-directed IRA accounts. But we are a tool here. We can be used to help guide the client on, okay, you're not really allowed to hold this within a self-directed IRA. There's a few things that you can hold within a self-directed IRA.
Exactly, Nicole, exactly. So some things are, a self-directed IRA, this is a common misconception. It follows the same regulations as your conventional, those Wall Street IRAs, same IRS regulations. So, but on top of that, there are some added on regulations. For instance, certain self-directed IRAs, you cannot invest in S corporations, collectibles, certain kinds of precious metals. So those are not allowed in a self-directed IRA. Then you go a little bit beyond that, Whitney. There are certain regulations, certain things to look out for called prohibited transactions. So, for instance, the IRA account holder is considered a disqualified individual to their IRA and its investments. So typically, something a lot of people, when they get into self-directed IRAs, they realize is they need to be hands-off from their IRA investments. Just because you bought a house from your self-directed IRA doesn't mean you can live in it. So certain things, so disqualified individuals, prohibited transactions, those are definitely the things we always encourage our clients, anyone, audience today listening to this podcast, you should research that. So when you're getting into a self-directed IRA, you're not doing anything that might jeopardize your hard-earned retirement money.
And that was something that, I quickly like had to learn because I was buying single family properties, and it's not that I was even going to live in the property, but one, I couldn't lend my funds to my spouse. I couldn't lend my funds to my daughter if she wanted to buy a property. They were prohibited, you know. Also, like I couldn't do the work on them, so I had to place them with management, and then I had all of the income and expenses that had to flow in and out of that IRA as well. So there's a lot of like little, it can be a really powerful tool, but it can be some nuances. That's why I really love, for me personally, and I would love to get y'all's feedback, pairing syndicated or, you know, passive, truly passive investments with IRAs, because you can get all of those advantages of real estate that people really love, you know, the income, the equity growth, the tax benefits, but the tax benefits stay locked up in the IRA, but, you know, but you can get the power of investing through the IRA, and it's professionally managed for you. So how do you guys, you know, I know you guys don't advise your clients on any of the actual investments, but how do you, you know, help kind of guide your clients whenever they want to invest in a passive deal?
So it's funny you said that, because passive deals are really the most popular type of investments everyone is trying to get to. And because, like you said, you get all the advantages and you don't have to worry about all those little things, because you're going to get into a deal, you're going to fund the deal, and then you're going to sit back, relax, and just watch it grow under that tax advantage, that tax umbrella. So with our clients, we actually have a great process of open fund invest. They actually come to us, Madison Trust, when they have a passive deal, and they let us know, hey, Nicole,
I'm interested in this. How can I do this?
How can I do this? I want to get into this deal. What do you need to make it happen for my SDIRA?
And yes, I mean, if you take a look at the seats right behind us, this is the team that will, you know, review and approve the assets. So we do have some investment document requirements, but you know, we keep it short and sweet for these investors. It's 3 or 4 basic documents to provide to Madison Trust so that we know that we can actually hold the asset. And it's also important during that process of investing to make sure that the documents are filled out on behalf of the client's IRA account and not them personally, because the IRA is the one that is purchasing the investment.
Exactly. And we have a fantastic team here, Whitney. So anytime someone has an issue or they're like, can I do this? I'm not sure, I want to talk to somebody. Feel free to give us a call. We are more than happy to help. While we don't advise on anything, we are definitely guide our clients on making sure that their retirement money is protected and they're not getting penalized for doing something they shouldn't. For instance, like you said, you know, lending money to your daughter or your spouse, and you're like, oops, I had no idea that wasn't a thing I can do.
These are things we're checking for during that process.
That's awesome, because if you make a prohibitive transaction, I mean, you don't just blow apart that one deal, you blow apart, right, the whole IRA.
Mm-hmm.
Yeah.
That is correct.
So, let's kind of shift, you know, streams here, because I'm sure we're going to get a lot more questions about general like IRAs. But, you know, one thing that I really want to dive into, because, you know, we were talking like a couple weeks ago when we set up the show, is you've got your Roth and your traditional IRAs. Those are kind of like the, I don't want to say vanilla flavor, but like, you know, your kind of standard accounts. But you guys had some 2 interesting types of accounts that I wanted to make sure we touched on for our listeners. And that is a checkbook IRA, and then the IRA Trust, which I had never heard before. So let's tackle the, how is a checkbook, how would one set up a checkbook LLC? I mean, like, why would somebody want to use it? Who is it for? Who is it not for?
Perfect. So let's actually start by clarifying the term checkbook IRA, because you'll see these terms, you know, gold IRA, real estate IRA. They're not necessarily a type of IRA like traditional Roth, SEP, Simple, but it's basically what you do with that IRA, what sort of, like, say, privileges you have in that IRA versus a normal custodial IRA. A checkbook control IRA actually provides you checkbook control. And how? That's through an LLC or trust.
Absolutely. So the IRA LLC process is handled by our sister company, Broad Financial. They create IRA LLCs for investors as well as IRA Grantor trusts for investors. But let's talk a little bit more about the IRA LLC process. So that's definitely the most popular amongst our investors who want to hold multiple pieces of real estate in their self-directed IRA accounts at Madison Trust. So that's where that checkbook control really comes in handy. They'll only have one IRA LLC as an entity within their account at Madison Trust. And then from there, the investors can write checks on their investment properties through that IRA LLC.
Exactly. Now, the trust. Oh, Whitney, yes, I'm sorry.
I was just gonna ask a follow-up question. So are the documents still going through Madison Trust for approval? Like, how do the documents get titled? Like, if I could just only imagine, you know, and I've seen it before actually, like an investor who has a new checkbook LLC, they just write the check, but it's still like, you know, they got to understand how to fill out the documents properly. So how do you guys ensure that quality or that compliance?
That is why we love our sister company, Broad Financial, because Broad Financial takes care of that entire aspect, that educating the clients on, first of all, what is an LLC? This is not your usual commercial limited liability company. This is a special LLC with IRA provisions in it so that you can actually have this under your Madison Trust account. With that being said, Broad Financial also takes care of the operating agreement, the EIN, the articles of organization in whichever state they would like to create the LLC in. Once that's all done, Broad also provides the educational material so the investor can be educated on, hey, if I have this IRA LLC under my Madison Trust account and I'm going to make an investment into a real estate deal, it needs to be under the name of my LLC because now I'm cutting that check from my LLC bank account. Really, hence why it's called checkbook control. The LLC has a bank account. That's where you get the checkbook from.
Now, you know, I would say, what was it, the winter of 2020, like there was a lot of hubbub, you know, a lot of people were saying that checkbook LLCs were no longer going to be, you know, allowed by the IRS. You know, what are, you know, do we, you know, how did that all shake out? Because I know some of that was, part of it was a misnomer, but then part of it, there was like an element of truth to it. Can you help us understand what was happening here and where we landed?
Yeah, so that was a bit of an uncertain time period for, I feel like a lot of SDIRA custodians there, right? Like they were trying to put out certain bills restricting certain things that were mainly going to affect SDIRAs, because it's not like you can have an IRA LLC in a normal conventional IRA somewhere else. Luckily, like you said, nothing got passed, and basically we are still good. IRA LLCs are still active, live. So far, no regulations have come other than what we already have, that if it's an IRA LLC, it needs to adhere to the same IRS regulations. Now, it's funny you mentioned that because that's around the same time we came up with this, the need and the demand for a grantor trust. Very similar to an IRA, but LLC, but a little different. Now, an LLC is a limited liability company, an absolute business entity, versus a trust is more like an agreement. There's going to be a grantor, which is typically the IRA. There's going to be the trustee, which is typically the client. And then the trustee can go ahead, hold assets on behalf of the grantor trust, and basically have checkbook control. And due to those conversations, that's where we really
that's where it became a thing.
Yeah.
And then 2020, the birth of IRA Grantor Trust. So that is definitely a common question we get asked, like, how have I never heard of this before? So I mean, there's three things that we can say off the top of our heads. It's fast, right?
It's so fast. Yes, absolutely. LLCs, you have to file with the state which you're going to be operating in, right? And every state is different. I've seen some states, not gonna name states, you know, but some states it takes 1 day, some states it's a 3-week backlog, it's time consuming. Some states there's a franchise fee where you have to pay annually. Some states, like, there's so much regulations. The trust is, like Nicole said, so much faster. We can get a trust up and running in 4 business days. Does the trust have the same liability protections as an LLC? Not really. However, it does have some, but not the same coverage an LLC has. But What
exactly.
else? There's privacy.
The fees, it's very cost effective for investors who want these type of accesses to their investments. And then the privacy aspect, the less reporting.
Absolutely. Absolutely. Some clients prefer to have everything in a trust so that there is a certain aspect of privacy. Every investment they've made is confidential. And that's again where the Grantor trust comes in. It's not, like Nicole said, Whitney, it's not a huge popular thing because not a lot of people have looked into trust. There is also not a lot of guidance on Grantor Trust out there. So I think I can safely say Broad Financial made a something good in a time of uncertainty.
So how does the trust differ specifically from the LLC? I mean, we got the anonymity, the protection, it's faster to set up, maybe lower fees. But what structurally, if you had, maybe we ask the question this way: if you had somebody, a potential client that you're talking to, and they're trying to hem and haw between the LLC and a trust, how would you guide them? Is one better for one investor and then another one better for a different investor?
Definitely. And that is where Broad Financial comes in, because they will actually sit down and have that conversation with the client and ask them, so what exactly are your needs here? So we can help you, which is better. Now, essentially, Whitney, they're all checkbook control, right? Whether it's called an LLC or whether it's called a trust, they're both going to give you the same checkbook control in your IRA. You're going to get a checkbook. And you can go ahead, start investing, cutting those checks, go crazy, have some fun, diversify your retirement portfolio. But the difference is, like I said, the LLC is a official business entity. It is filed with the state. It's an actual business entity versus the trust is more an agreement. You're going to have a IRA Grantor trust agreement where your IRA is the grantor and the client is the trustee, basically acting like the manager in an LLC.
Just the difference between that I can think of is IRA LLCs, they do allow multi-member investing.
Yes.
And they do allow investors to invest into foreign assets. That's mainly accepted. Whereas IRA Grantor Trust, you don't really see that with foreign assets.
Yes. And something very important, Nicole, just you mentioned it, the multi-member aspect, Whitney. So let's say the three of us, we want to set up a checkbook control, right? Okay. The trust limits us because with the trust, there can only be one trustee. You can't have multiple members in that trust. Versus an LLC, all three of us, all three of our IRAs can be members. Someone is going to have that 33.34% because, 33.33. So one will have a little bit more ownership than the other.
I'm taking that 3%, not you.
But basically with an LLC, it has more pros than cons. You can have multiple members there. There is that limited liability, which for some investors, that's huge. They really, really want that limited liability. But as always, we always tell a client, you know what? You need to speak with your financial professional who knows your situation and show them all both the options and talk with them and see what will best fit you.
So I guess I would maybe ask that question in my legal expert, but I'm curious here, if the Grantor Trust is in the retirement account, are you still afforded the same creditor-predator protections as, most retirement accounts offer state to state?
So could you clarify that a little bit, that question for me a little, Whitney, when you say creditor protections?
Well, I mean, in some states, I would say I can't think of a state where there isn't some sort of provision where, if there was, say, I had a retirement account, but I got sued, all my other assets would be up, on the chopping block to divvy up in my retirement accounts. They're not really mine, right? They're for benefit of accounts. So they're not, up to a certain dollar amount, I wouldn't be forced to liquidate those accounts. Does the Grantor Trust and that Checkbook LLC still afford those type of protections under the umbrella of their retirement account?
Because they are all, like I said, same regulation applies to all IRAs. So essentially, yes, because this is not a special type of IRA. This is still your normal IRA, except it's self-directed, so you can invest into alternatives. And within that IRA is where that IRA LLC or Grantor Trust resides, or sits. So essentially, every protection that your IRA has will be the same for an SDIRA as well.
Okay, awesome. Well, I want to make sure we leave plenty of time for our Ask Me Anything session. We're starting to get some questions rolling in. If you are here live, make sure to go to your Q&A box, drop in any questions that you have, and we will get those answered for you. But I want to wrap up with this. What are if somebody's considering setting up a self-directed IRA account, a lot of people get nervous taking control of their money. They think they might mess things up. What is the number one way that you see people mess up their IRA accounts?
Not knowing the
how can we help people avoid that?
Oh, that's a deep question. We've seen it all.
I just answered it right in my head. I'm like, not knowing the prohibited transaction rules, thinking that they can hold, life insurance or collectibles in their accounts. And then, the family line.
Yes, the disqualified individuals. I think, yes, that's definitely most of the time how a lot of people mess up. But I think what I would recommend to those out there who want to get into this, but they don't know, do a little research. Our site, actually, it is a wonderful, we have a lot of resources for people who want to understand more. What is a self-directed IRA? What can I do? What shouldn't I do? If I don't know, what do I do? And even after that, if your questions aren't getting answers, give us a call, because we always prefer everyone to talk with us first, walk us through what they're planning to do rather than do it. And once it's too late, come back and be like, well, that investment was $100,000 and I did this. I don't know what to do anymore. Prevention is better than cure. So always research and then talk to the experts. We are here to help.
Awesome. Well, guys, thank you so much for joining us today. If people want to find out more about your services at Madison Trust, how can they do so?
Great question. So 2 options for you guys. If you'd like to set up a self-directed IRA account, I can certainly provide you with, a Calendly link or anything to schedule another call, or you could visit us on madisontrust.com, where you can open an account that way. And if you are interested in more information about Broad Financial, you can contact us at the broadfinancial.com.
Broadfinancial.com. And just to again clarify, Madison Trust Company, we are the self-directed IRA custodian. And for those of you who are interested in IRA LLC, setting up a Grantor Trust, that's broadfinancial.com.
Awesome. You guys, thank you so much for joining us today. If you're here live, don't go anywhere. We're about to start our Ask Me Anything session.